In the beginning of 2024, the most devastating disaster in Chinese history suddenly struck the stock market. On February 2nd, the Shanghai Composite Index fell below the 2,700-point mark, showing clear signs of panic selling and forced liquidation of some trades. The wealth of countless stockholders was brutally harvested, and cries of despair echoed among them.
It's February the 2nd. I couldn't sit still at home today. The worst losses I've suffered happened today. On the day it went below 2,900. I've never lost this much. When it broke 2,800, I've never lost that much. Today, when it broke 2,700, I couldn't sit still at home. I felt uncomfortable lying down and even more uncomfortable sitting up. Actually, I mostly regret going into the stock market. If I have future generations, I will definitely make it a family rule. No stock trading. I feel like dying because of these losses.
As an investor, I shed tears for the first time. I feel utterly suffocated. Over in the US, they're hitting new highs, tens of thousands of points. But looking at our A-shares, I wanted to wish everyone a happy new year, but who can be happy? Everyone around me has their accounts blown up, losing millions in just these few days. I don't dare to record videos at home. Losing money in the stock market, I can't blame myself. What can you do in this kind of market? Over 5,000 stocks are falling. I got trapped in a wave yesterday, and today I am caught in another one. I don't even know how to get through this year. Sometimes it's just too sad to think about it. The Shanghai Composite Index hit a low of 2,666 points on February 2nd. Today's market has already broken records. January 2024 marked the worst month for the Chinese stock market in 34 years, without a doubt. In the morning, a friend went to see a psychiatrist to talk about the stock market, and even the psychiatrist cried. That psychiatrist also suffered heavy losses in the stock market, feeling even worse. Today's market is absurd. The average stock price dropped by 5%. China's stock market has experienced bear markets several times, even super bear markets. But the premise was that there were brief bull markets before, where you made money before losing money. Now, this decline from over 3,000 points directly downward, nobody has made money. Institutions, speculative funds, retail investors all lost money. The current decline is hysterical. It's vicious and irrational. China's stock market has just experienced one of its darkest weeks in recent years. After the closing on Friday, February 2nd, thousands of stockholders flooded the official Weibo account of the U.S. Embassy in China, leaving comments under a post about rescuing giraffes. They requested the U.S. to take over the Chinese stock market. Some even openly cursed the CCP system, demanding the U.S. to send aircraft carriers, saying, "Chinese people will pave the way for you." According to screenshots, a person from Hebei said, "Singing praises every day, no truth in them and all empty words, saying high-quality development. Have the U.S. heard of that?" A person from Shanxi said, "There are problems in our society. We don't focus on the economy or people's livelihoods. There are no policies. The management team can only hold meetings and write propaganda, and can't do anything else. America, please liberate humanity quickly." These speculators include not only the traders and market makers in the stock market, but also institutions and individuals in disguise that get listed, including officials from the China Securities Regulatory Commission. The stories of getting rich quick in the Chinese stock market often accompanies the tears and cries of many retail investors. Some investors bitterly criticize that the Chinese stock market is too murky, saying, "They will eventually take the money and immigrate to your country anyways. Why do we not just give it to them directly without the extra processing fee?" Another investor summarized their despair. "After I started investing in the stock market, I no longer love this country." Some people lamented, "It's really sad that investors have to seek help in this way. In a country as great as ours, with 1.4 billion people, there isn't even a place where one can speak the truth. The official media on Weibo never dares to open their comment sections. The only place where people can speak the truth is the Weibo account of the U.S. Embassy in China. This is truly a shame for 100 years. The deepest wounds are inflicted on those who believe in the future and the destiny of China. These people are now completely ruined. As of around 5 a.m. on February 4th, this post has garnered 452,000 likes, with over 91,000 comments and more than 12,000 shares. Many stockholders also left comments under the official U.S. Embassy's Weibo post about a joint statement on the 3rd anniversary of the military coup in Myanmar, saying, "A shares are being harvested. Please, Beacon U.S., bring your warships over." Some people expressed gratitude, saying, "Thank you for speaking up for justice. We love whoever treats us well. I love America. Official media doesn't let us speak, so we come here to request help. It's pretty good here, at least the comments aren't deleted. Please, mighty United States, save A shares." In addition to the stockholders shouting rebellion, many former extreme Chinese nationalist stockholders also left comments apologizing to the U.S. They used to frequently criticize the U.S. and admit that they have been awakened by the iron fist of the stock market, recognizing the evil of the CCP system. One of the catalysts for the eruption of resentment among Chinese people was the closure of the comments function on the China Securities Regulatory Commission's Weibo account, which made them even angrier. Consequently, they shifted their battleground to the U.S. Embassy's Weibo to vent their anger. Some people even joked, for the first time, they feel the air of freedom. Although, in reality, the U.S. Embassy's Weibo also has administrators deleting comments, but at least they haven't directly disabled the comments function. As the Chinese stock market continues to decline, on January 23rd, the Shanghai Stock Exchange suddenly issued a notice stating that food delivery and express delivery services were not allowed to enter anymore. All delivery and express services must undergo security checks. Some people commented that friends in the Shanghai Stock Exchange said they weren't allowed to order takeout anymore for fear of poisoning. Others also reported that it was because everyone in the Shanghai Stock Exchange received a pile of excrement. It seems that the continuous decline of the stock market has successfully aroused the anger of 200 million stockholders. So they have to be cautious of someone retaliating against the staff of the Shanghai Stock Exchange. Due to geopolitical risks, sluggish economic recovery, and policy uncertainties, the Chinese and Hong Kong stock markets became the worst performing stock markets among the major global stock indices at the end of 2023. In recent months, Beijing has introduced a series of measures aimed at rescuing the market, but analysts say that measures are not enough to restore market confidence. Nicholas Spiro, partner at Larissa Advisory, told Business Insider in a recent interview stating that there is an uber-bearish narrative around China that is proving very difficult to dislodge. China is emphatically out of favor with global investors. On January 22nd, Bloomberg reported that Chinese authorities were weighing a rescue package for stocks worth as much as $278 billion, pulling primarily from offshore accounts of state-run firms. However, experts told Business Insider that even a sizable initiative may not bring the bears back to China. In the past year, due to China's weak economic growth, there have been continuous bankruptcies of real estate companies, foreign capital withdrawals, and escalating China-US trade disputes. So global investors' bearish sentiment towards the Chinese stock market has become more entrenched, leading to widespread shorting of Chinese stocks. According to data compiled by Bloomberg, global funds sold a net 14.5 billion yuan worth of stocks in January, extending their selling streak to a record 6 consecutive months. The Chinese officials continue to sing the so-called bright economic theory, claiming that their economy is stable and improving. Premier Li Qiang of the State Council stated at the Davos World Economic Forum on January 16th that China's full-year economic growth reached 5.2% last year. However, given the actual situation, this data has been repeatedly questioned by experts. Qing Weiping, an economist in the United States, pointed out that the space for the Chinese authorities to intervene in the market again is limited, and it can even be described as it's hard to make bricks without straw. The Chinese government cannot change the fundamentals of the economy. No matter how much stimulus is given, the debt hole is too big. It's already lucky that the economy is not deteriorating rapidly. There aren't many resources to rescue the market, and there's no way to save it even if they want to. Li Hengqing, an economist at the U.S. Center for Strategic and International Studies, believes that the Chinese stock market itself is not market-oriented. Although the Chinese government has previously introduced measures such as interest rate cuts and reserve requirement ratio cuts to rescue the market, investors are not buying it, and market confidence is on the verge of collapse. The reason is that the entire foundation of the Chinese economy has collapsed. Both the common people and investors have completely lost confidence in the government. Everyone is waiting for the central government to intervene. As soon as the central government intervenes and the stock price rises, they will sell immediately. Li said that the boldest move the Chinese government can make is to convert to a free market and democratic rule of law. But that would mean letting the Communist Party relinquish power and Xi Jinping to step down, which is the most sensitive issue for the Beijing authorities. The Chinese government's announcement of a series of economic stimulus plans has failed to stop the spread of the crisis. The plummeting of the Chinese real estate and stock markets is devouring the wealth of middle-class families. The emergence of China's middle class is rooted in the rapid development of the economy over the past 40 years. The rise of industries such as real estate and the internet has led to a rapid increase in the number of middle-class people. However, they are also the most vulnerable group, facing enormous pressures, including depreciation of the value of education, inflation, soaring housing prices, and financial crises. With the collapse of the real estate market, most middle-class people have lost everything. AX, a Chinese influencer with 210,000 followers, recently said in a video that in first-tier cities like Beijing, Shanghai, Guangzhou, and Shenzhen, many families' main assets are houses. Some families' assets are claimed to be worth tens of millions or even hundreds of millions. However, this is based on high house prices and being in a high economic position. With the decline in real estate, many houses are difficult to sell and are constantly reducing prices, even offering discounts of more than 50% to sell. He said that as the real estate market declines, a large number of middle-class people will truly enter a poverty mode. Because in big cities, many middle-class people buy houses with loans. He gave an example. A house worth 10 million yuan with a down payment of 3 million yuan and a loan of 7 million. But if the house suddenly drops by 3 million yuan and is only worth 7 million, then the 3 million yuan down payment is gone, and the 7 million yuan is only the value of the property. To get rid of it, it will take time, which also means that families claiming to have tens of millions in assets will end up owing 7 million yuan. He analyzed, nowadays, many families are facing property devaluation, and their assets are continuously shrinking. Countless middle-class families burdened with loans will fall into poverty. If they happen to lose their jobs or experience wage cuts, how will they repay their loans? As Sean Rain wrote in his book, The End of Cheap China, the biggest problem in China now is the dissatisfaction of the middle class, who are the most pessimistic middle class in the world. Recently, an article titled, Many People Will Return to Poverty in 2024 on the WeChat account Shui-Mu-Ran column went viral, resonating with many people. The article lists the bursting of the mainland real estate bubble as the first sector to return to its original state. If the Chinese economy was weakening in 2023, then it's collapsing in 2024. The article suggests that the Chinese economy can be divided into two halves. The first half is the period of rapid growth, 1979 to 2023. And in 2024, people will have to face the reality that windfall profits can only exist in times of product scarcity, limited information, and extensive demand. Now, these conditions no longer exist. Many people's wealth is more of a product of fearlessness, speculation, and improvisation. Many believe that once they make money, they will have achieved great success and can rest easy. They completely forgot the rule that speculation and trickery will eventually lead to disaster. So they have been repaying their dues in these past 2 years. The article suggests that certain areas will revert to their original state. 1. The bursting of the real estate bubble. Housing prices will stabilize, and there won't be any more skyrocketing prices. Many third and fourth tier cities may even continue on a long downward trend. 2. The disappearance of the internet dividend. The traffic dividend has disappeared, and online traffic is becoming increasingly expensive. Consequently, it's becoming harder for those involved in e-commerce, live streaming, and WeChat businesses to make money. Even social media giants are starting to downsize. 3. Breakdown of capital chains and contract violations. Many businesses have been expanding blindly. Once society no longer develops rapidly, they suddenly find themselves short of cash flow. Consequently, contract violations are common, with companies mutually guaranteeing each other, leading to a series of default effects. 4. Disappearance of cheap labor. The advantage of cheap labor no longer exists. Labor costs are increasing, and while people become more expensive, products become cheaper, which is not sustainable. Low-end companies can only go bankrupt and liquidate. 5. Thin profit margins. With an increasing number of products and severe homogenization, companies are forced into price wars. If you don't sell, someone else will. This leads to increasingly thin profit margins for enterprises, with no money to be made. 6. Bubble industries squeezed out. Some hyped-up new concepts will eventually reveal their true nature, including new energy, virtual currencies, blockchain, metaverse, etc., which come and go quickly. 7. Normalization of the pandemic. People are normalizing the pandemic, and the virus will coexist with humans long term. This places higher demands on the core values of businesses. Products and services that people are unwilling to risk experiencing will become worthless. 8. The arrival of over-competition. When overall growth hits a limit, people will enter a stage of internal competition, with various methods emerging endlessly, and even ones without a bottom line. The article concludes, it can also be understood in this way. The most typical trait of the second half of China's economy is that only good people can make money. What goes around comes around. Starting now, many speculative overnight millionaires will return to poverty. This is not an exaggeration. Regarding the above article, a person commented, China's biggest problem is overcapacity, and real estate has drained the blood of the common people. China's economy is showing clear signs of decline, leading to various speculations. Obviously, with economic decline, high unemployment rates, and reduced consumer spending, the vulnerability of an authoritarian regime has significantly increased. How long will China's economic decline last? Chinese-American economist Cheng Xiaonong believes that once the economy of an authoritarian country declines, it's like a full outbreak of economic cancer, and it's in the late stage. There's no use of surgery or chemotherapy, radiotherapy anymore. It can only hold on to its last days. The economic decline of authoritarian countries is completely different from that of free market democratic countries. The economy of authoritarian countries is forcibly driven by the government using administrative means. For example, the real estate bubble in China over the past 20 years was created by the entire country together. Once the bubble bursts, it's not simply market failure but government failure. Cheng said that the Red government, whether prosperous or declining, will launch a military challenge against the United States. Once the Cold War starts, it also marks the end of the Red Giant's movements in international space. Because the Cold War has a rule: no battle can be ignited. Amazingly, just a few years ago, many people around the world were optimistic about China's rise and prosperity. Suddenly, they found out that this authoritarian Red Giant is falling into the abyss. Perhaps this is the greatest favor that the god of fate has bestowed upon free democratic countries.